Think a U.S. government shutdown sounds scary? It just pumped a record $6 billion into crypto in 1 week. Yeah, you heard right. While Congress keeps playing chicken with the federal budget and the latest jobs report came in weaker than a decaf espresso, investors stampeded into Bitcoin, Ethereum, and the rest of the digital zoo. Why? Simple. When Wall Street smells uncertainty, it hunts for assets that sit outside the traditional system. Crypto's the digital bunker. Bitcoin alone vacuumed up the majority of that 6 billion inflow, popping back over key resistance like it owned the place. If you're new here, an inflow is just money entering an asset. Picture a fire hose of cash pointing straight at Bitcoin wallets. More inflows usually equal more price heat. But remember, this is not financial advice. Speaking of giant hoses, Michael Saylor just lobbed another headline grenade. The MicroStrategy boss went on a podcast with YouTube king Mr. Beast, yes, the dude who gives away islands, and told him flat out, buy Bitcoin. Saylor calls Bitcoin the apex property on Earth, claiming it's the ultimate shield against inflation and currency chaos. Mr. Beast didn't confirm a buy on air, but with 236 million subscribers, one tweet from him could light the market like the Macy's fireworks. If you see hashtag BeastCoin trending, you'll know why. All right, let's slide over to Ethereum. After weeks of whale dumping, those are holders with $10 million or more in ETH, basically the blue whales of the crypto ocean, the price finally fought back north of $1,600. Whales exiting usually spooks retail investors because big wallets can crush the order books. But here's the twist. On-chain data shows small and mid-sized wallets scooping up the ETH that whales are offloading. Translation: the little fish are eating and network activity is up. Why the resilience? 2 words: staking rewards. Since Ethereum switched to proof of stake, people earn passive ETH by locking their coins to secure the network. It's like getting interest on your savings without a bank in sight. Staking yields hover around 4%, and in a shaky economy, that looks pretty tasty. So where does all this leave us? First, macro fear. Shutdowns, weak jobs can be crypto's best hype man. Second, a single influencer conversation can swing sentiment faster than a New York minute. So keep an eye on Mr. Beast's timeline. Third, Ethereum's tug of war between whales and retail shows the market's maturing. Big sellers no longer guarantee a death spiral, especially when staking keeps coins off exchanges. Before you sprint to an app and smash buy, zoom out. Crypto is still the Wild West, volatile, unregulated, and addictive. Never bet the rent, never chase green candles, and always DYOR. Do your own research. This is not financial advice.